Our final company of the evening, Kavango Resources, is a Southern Africa-focused metals exploration company with exploration interests in Botswana's Kalahari copper belt, the Kalahari Suture Zone, and now Matabeleland in Southern Zimbabwe. CAV have just signed a 2-year option to acquire Nara, a producing gold exploration project with 45 contiguous gold claims and the potential to host a bulk mineable gold deposit. Well, we've been hearing about bulk mineable gold deposits from the previous company. Kavango announced a potential 6 million equity investment in 2 parts in May. As I understand it, part 1 is completed and Purebond Limited now own 26.7% of the company. If stage 2 completes, that will move to 52.5% of the business. Monies raised will fund exploration work, possible acquisitions and contribute to the company's general working capital. Here is Ben Turney, CEO at Kavango, to explain all.
Sorry, it would help if I unmuted myself. Hi, Donald. Thanks very much for having me.
My pleasure, Ben. Are you nicely unmuted and ready to go?
Yep, we are ready to go. Thanks very much for that previous presentation. It actually segues in perfectly into the opportunity that we believe we have here at Kavango.
It does indeed.
So, moving into Zimbabwe is a big deal for our company. As Donald said at the beginning, we've been known historically for the work that we've done in Botswana. Now, so far, that hasn't led to any success for us in the field, despite significant investment in our projects. The biggest challenge that we have in Botswana is that our projects are all covered by quite deep Kalahari sands. So at surface, there is little to no regional geology to act as guides to help us hopefully finding mineral deposits. In Zimbabwe, the situation is very, very different, and that's been the primary attraction taking us into what is otherwise viewed as a very risky jurisdiction in the world. Now, one of the things about Zimbabwe is it has a reputation for being a country that hosts a large number of small, high-grade mining operations. There are currently 4,000 deposits in Zimbabwe that are being mined. But what that consensus misses is the obvious comparison with Australia. And it's fantastic that the presentation you've just listened to takes us into one of the key points that's attracted us into Zimbabwe from the very beginning. In 1982, as you can see from this chart in front of us, Zimbabwe actually produced more gold than Australia did. The geology in Australia and particularly the prolific goldfields of Australia and Zim is very, very similar. But where Zim went through a lot of difficulties over the last 48 years, both pre and post independence, Australia from the mid-1980s onwards experienced the bulk mining boom. And in very, very simple terms, what happened in Australia is ready to happen in Zimbabwe again. But unlike back in the mid-1980s, we won't be having to reinvent the wheel. We'll be using tried and tested methods and technologies to extract the minerals that we discover. But where Kavango has its edge is with our use of modern technology and the exploration team that we've built up, and what is a genuine first mover advantage in this country. Now, if you look back at the gold production stats, you can see that when the bulk mining boom took off, that led to 30 years of continuous economic growth in Australia, where the country hasn't actually experienced a recession since then, largely as a result of what happened. And the premise is very, very simple. If you imagine gold deposits, the high-grade veins, they can occur in reefs that run parallel to one another. And in very, very simple terms, what happened was that historically, the miners had focused simply on the high-grade reefs. No one had looked at what was in between those reefs. And what we've just heard in the presentation just now is that these days, some of the biggest, most prolific, most profitable mines are those bulk mining opportunities, which have looked at the gold that's contained within what used to be the waste rock between the high-grade veins and is now subsequently being effectively scooped out in these super pits. Now, because of a lot of the troubles that Zimbabwe went through, despite the amazing geological potential of the country, these 22 old greenstone belts, no one has really exploited that in the last 40 years. And it's our belief at Kavango that there is a significant opportunity here, notwithstanding the challenges that we will face in the country. Now, we've been working on the Zimbabwe project one way or another for about the last 18 months. I first went out to Zimbabwe in August last year, and unlike a lot of companies which I see are talking about moving into Zimbabwe, we've put in place a very, very strong foundation for and a plan to execute to take our company into this country. We'll provide a copy of this presentation at the end. This is obviously a bit text heavy, but I wanted to show this slide tonight, Donald, just to give an indication of just quite how much preparation and work we've put into this before announcing these two options that we've picked up on the two projects that we're hoping to acquire, subject to field due diligence. So let's talk about the two projects themselves. Our main area of focus is Matabeleland. Matabeleland is in the southwest of the country, and it has within it a number of the most prolific historic greenstone belts. You can see on this map in front of us the town of Bulawayo. I'm actually going to be moving to Bulawayo as part of this opportunity in January next year to lead our company on the ground. The opportunity down there is so significant, and everything I've seen down there shows me we need strong leadership, strong local leadership on the ground to drive forward our operations and take real advantage of this opportunity. So I'll be relocating there with my partner to take on that role from January 2024. Now, one of the things about Bulawayo, and in particular about Matabeleland, is the infrastructure down there is surprisingly strong. So if you look at any of the charts for Zimbabwe, any of the reported statistics of how the country is performing economically, they don't match up with what you will see on the ground. Where Zimbabwe doesn't have really any sort of effective capital markets, that in itself presents quite a significant opportunity, because notwithstanding the lack of available finance for everything from a small car loan through to project finance for development of a mine, that's really quite significantly constrained the development of Zimbabwe's gold exploration industry. One of the things that really struck me while I was out in Zim was the sound of the stamp mills. Now, stamp mills are 19th century technology that you currently see all over southwestern Zimbabwe, and they're being used to produce the gold. And effectively, they're hydraulically driven hammers that hammer and crush the rocks down into a state so that the gold can then be extracted from that using cyanide leaching. Now, this has been what's driven the Zimbabwean economy. It's very much a cash-driven economy these days. And if you ever do visit the country, you'll notice the number of quite high-end cars that you see on the road, the trucks that people drive, the shops that are full of products that we would all recognize as at prices that we pay in this country as well. All of this is driven by cash. So where a lot of our economy now is completely reliant on debt, if you see somebody driving quite a smart car, you don't know whether or not that person actually owns that car. In Zimbabwe, you know that that person owns the car because there is no available finance to finance it. Now, that's quite a micro view of the potential of the opportunity in the country. But it does really say a lot about the industrious nature of the people down there, how entrepreneurial they are, and how hardworking. Through Hilary Gumbo and through the connections that we've had in Botswana, we've worked with a lot of Zimbabweans. And one of the things that's always struck me about the people I've met from Zimbabwe is how eager they are to get on. It's a very well-educated population. English is the second language. It's the lingua franca of business as well. The people on the ground and the talent that there is available locally, they are so desperate to see their country and their mining sector develop, because what everybody recognizes through this growth point strategy that they have in the country is that mines offer one of the greatest fast-tracked ways of social advancement and economic advancement that is available to a country like this. And because there has been a near total lack of modern exploration and modern mining in this area over the last 40 years, this is an opportunity that is just really crying out for modern investment, which we believe a company like Kavango, through obviously our status as being listed on the London Stock Exchange and the access to international money markets that we have, we believe that we can bring both our skills and our access to finance into this country and develop some of these projects in a fast-tracked manner. Now, our first project that we took on, as you can see in this picture here, we've got a copy. We can see Peter Winterby, who's one of our directors, with Brett, and to the right is Steve Smith. Now, Steve has been the main inspiration behind this move into Zim. Steve is a former exploration geologist from Anglo American. He rose as far as an exploration geologist could without actually getting onto the corporate ladder. Steve's blood is in exploration, and when he first went to Zimbabwe in 2008, he fell in love with the geology there, and he stayed in Zimbabwe throughout the troubled periods. Anglo pulled out of Zim in 2007, but Steve, when he moved into the country, he saw the potential there. And over the last 15 years, I honestly don't believe there is a person alive on this planet who knows as much about the Matabeleland goldfields as Steve does. So Steve has very much been the inspiration behind this, and Steve is currently helping us develop our operations on the ground as well as sourcing new projects. Now, the first project that we've anonymised, Donald, to keep the details of the people that we're working with private, is the Nara project. It has 4 historic mines on it that between them produced 90,000 ounces of gold in the first half of the 20th century. We believe that this project, with its 4 kilometres of strike across about 48 gold claims, has the potential to host over 500,000 ounces. Now, one of the great things about this project in particular is it's sustained a 35-year stamp milling operation, which essentially has meant there's been continuous production using effectively hand picks to dig the gold out of the ground. And they've really just scraped away at the high grade gold that's available on the surface. So we know that there is a lot of gold there. It has sustained this operation. It's this operation that's led to the dump that is one of the most attractive aspects of this project as well. We believe there's between 150,000 to 250,000 tons of material to process. We don't know what the grade might be at the moment, but we are going to test that with auger drilling in the coming months. And that offers us obviously potential for near-term revenue. But the project itself, the claims are contiguous, but uninterrupted along the strike. So although British investors are used to seeing companies with larger exploration licenses, as we have in Botswana, the whole attraction, or a big part of the attraction for the opportunities in Zimbabwe, is if you think about what the actual size of a mine is, it's obviously much, much smaller than the original exploration licenses. It's our belief that by picking the right areas and securing the right deals, we don't need to build up a large land package. Instead, we're acting much more as a sniper in this space, looking to take out the best opportunities that we can that exhibit the kind of characteristics that we see down at Nara. Now, so far, there are about 2,000 metres of artisanal and small-scale mining workings across the site. Assays, we've done some initial assay grab samples of between 1 and 4.4 grams a tonne. Now, obviously, these are grab samples, so we're not putting that out as an RNS, but these do give a bit of an indication of the potential. And what you can see in this image down to the right is a hand specimen of quartz with disseminated arsenic and gold that's clearly visible. Now, again, this is just a rock that was lying around at surface. This is something that hasn't actually been processed, but it's an indicator of the size and the scale of the opportunity that we have in front of us at this project. Now, one of the other big attractions at Nara, we obviously have the surface potential that we're going to be exploring, looking for that bulk mineable potential deposit. We have the dump that offers us the possibilities of near-term revenue. But we also have quite significant underground workings. We've already sent a mining engineer into the underground workings. He was there 2 weeks ago. So he went just a week after we signed this option to check that the pillars hadn't been ripped out and that the mine, which goes down to about 7 levels, is still intact. We haven't received the final report from him yet, but from what he's seen so far, it does appear that this is safe. And Kavango has recently purchased its own underground rig to enable us to look at underground exploration. So what we're interested in underground is where the historic miners focused on the high-grade quartz veins to mine out. Nobody really looked at the bulk mining potential from underneath. So what we've already seen is significant indications of potential in the wall rock as well. So we're going to look to drill this out as quickly as we can. That is assuming that we do get the all clear on the underground workings. Now, today we managed to get this out before the presentation. I was very keen that we completed this deal this afternoon. I set a hard deadline of 25th of July. We've also announced the Hillside project. Now, we've got a 6-month option on this project that's just been announced this afternoon. Hillside lies in the same greenstone belt as Nara, and it's a few kilometres away to the northwest. It sits along the same strike, and while it's not quite as big as Nara, it's 400 hectares across 40 claims, which aren't quite contiguous. It's spread across 3 targets in 3 blocks. Because it sits on the same target zone, we're interested in exploring this because if our plan works out at Nara and we are able to identify that 500,000 ounce resource, we believe the Hillside project alongside that has equal potential for a surface bulk mineable deposit. Now, that's what we're going to be searching for in our exploration. And because of its proximity to Nara, if we do ever get to the point where we mine this and we build out the processing plant, this project has wonderful potential to be a feeder into Nara. Oh. Finally, we have the Leopard project. Now, the Leopard project we also announced as part of the same deal today. That's further to the northwest on a separate greenstone belt. It's in an area that's not too far away from Caledonian Mining's Motapa project. It covers two historic projects, one we called Site 1 and one that we've called Site 2. Site 1 has got a historic resource on it that was drilled out in the 1970s, so it's not code compliant. It's about 220,000 ounces. So our plan at Site 1 is to go and retest that target. Now, there are some complications around identifying where that target might be, so there's some initial preparation work that we need to do, the drill logs that we have access to. There's a few gaps in the information that we have, but we've developed a really quite impressive looking already 3D underground model. So when we come to mobilize the drill rig here, we've got almost a walk-up target. There's an adit on site as well from some underground workings. You can see Brett and Hillary at their site visit to this project. That is the adit that you can see on the top right-hand side. We'll be doing, again, underground drilling here, as well as sampling along the wall rock sides to see what potential there might have been left from the historic underground mining. Site 2 is very interesting because Site 2 sits on one of what historically was one of Zimbabwe's very large producing mines. It mined down to about 1,000 meters. It was an underground mine at about 0.5 gram a ton. We're not so interested in the underground there. We don't believe that that's safe. We're not looking at the underground opportunity. Instead, what we will be looking for, again, is this bulk mining potential near a surface, testing some of these high-grade veins that have been historically mined. There is artisanal working, again, on this project, as there is at the other two projects as well. We've got quite extensive signs of both recent and ongoing artisanal workings. This again gives us quite a clear indication of the gold that is near surface, and it's now up to us to get in there and test the bulk mining opportunity. We've already mobilized a surface rig into Zimbabwe. That's currently being taken into the country alongside our underground rig, and we're hoping to be able to start drilling in Zim in the next couple of months and look forward to providing updates. So, Donald, I was conscious that we didn't have a huge amount of time. Should we move on to the Q&A?
Yeah, no, that would be absolutely fantastic. Now, I'm busy scribbling my questions here because things have changed fairly dramatically. So, Zimbabwe seems to be the home of bulk mining from your perspective. That's the new strategy for Kavango, is it?
We hope so. The biggest challenge in Zim, apart from the obvious sort of the economic issues in the country, is actually the ownership structure. Now, in Zimbabwe, there are effectively two forms of license for a company like ours. You have what's called an EPO, which is an exclusive prospecting order. That's like an exploration license, similar to what we have in Botswana. The problem is that there are EPOs that have been pegged over pretty much all of the most prospective ground. There are some that might be available. We are looking at some opportunities to pick up some EPOs, but they really are like hen's teeth. However, what you have within those EPOs are what are called gold claims and base metal claims. Base metal claims are much larger than the gold claims. A gold claim is a 10-hectare area that historically would have been pegged out by a miner to come and start up a mining operation. Now, this structure dates back about 80 years. It was when the British were involved in Zimbabwe, and it's carried on through to today. And the reason that it's carried on until today is because obviously what these 10-hectare plots give is the opportunity for local contract miners to build small local businesses. And that's really what's driven the Zimbabwean economy over the last 10 years. The challenge is that with these claims, it's finding enough of these that sit on contiguous blocks to enable exploration. Because obviously for a company like ours, a 10-hectare claim or even a few 10-hectare claims isn't worth so much. What we're looking for is the potential for 500,000 million-ounce deposits that will lend themselves towards bulk mining. Now, the number of projects...
What's your solution then to your problem?
exactly the projects that we've picked up. So we've identified a pipeline of projects which have got contiguous claims stitched together, a long strike of potential gold deposits that have got security of tenure and have been owned by the same individuals for quite a long period of time. That's very important in Zimbabwe because you want to secure your legal tenure just in case you do run into some of the issues that can occur down there. But so what we focused on, we've got a series of criteria that we've applied to our search for projects across Matabeleland. These 3 projects that we've now secured, these were our top 3 targets. But underneath that, we've got about another dozen that we're looking at. Sorry. Now, this is also another reason that we're playing our cards quite close to our chest at this stage, because the first mover advantage for a company like ours down there is very significant. We've got an opportunity here, Donald, to build a mid-tier gold producer.
My slight worry is that the rule of law isn't the firmest of things in Zimbabwe.
Look, we're under no illusions. It's a hard environment to operate in, but strength does matter down there. As long as you do things in the right way, you follow the rules to the letter, and the bureaucracy down there does require a degree of management. Unlike in Botswana, where we run the business remotely, what we are very clear about in terms of our business and our plan in Zim is that we have to be strong on the ground. Hilary obviously is on our board, one of our co-founders. He's from Zimbabwe. He lives in Harare. He knows a lot about the country. Steve Smith is a very close contact of mine. He's introduced us to a lot of people. We've built up already a very strong support network in the country. And once I'm actually down there on the ground and able to run the business from there, while obviously we've got to be alert to some of the issues that we might face, by doing things in the right way, by investing properly, and also investing in our people down there, just as we've done in Botswana. I believe that will be what makes the difference. If we look at Caledonian Mining, they've paid something like 14 consecutive quarters of dividends now. They've been able to build a very successful business. Their current market cap is around about £250 million. They built that over the last 15 years. That was through 3 periods of hyperinflation. So it is definitely possible, but yeah, this is not a jurisdiction for the faint of heart.
No, indeed. But we've had Caledonian Mining on London South East. They're a cracking company, and as you say, perhaps slightly against the odds, but they've absolutely made it work, and then indeed expanded their mining operations. Both in
you say against the odds. I mean, it all comes down to risk reward, and one of the advantages of Zim for a company like ours is the entry price. To pick these projects up, Donald, that we have, even in a slightly safer jurisdiction. I mean, God, in somewhere like Australia, the prices for this would be a multiple many times what we're paying. So on the one hand, yes, you're right, the risk is there, but that is also reflected in the price. And because we're turning up with hard foreign currency, ready to invest into the country, there aren't many people like us who are down there currently doing that. So, we believe that, our position, while we're certainly not going to rest on our laurels, and we're not going to, we are going to remain alert. We do believe there is a significant opportunity. The government's been very keen to promote that Zimbabwe is open for business. Let's put that to the test. Okay.
Now, James Patterson asks about Nara because he didn't know about Hillside or Leopard. But imagine this is exactly the same question for Hillside and for Leopard as well as Nara. Is it an outline investment appraisal for Nara, Hillside, Leopard? And if so, please give it a rough outline. He talks about target resource, capital outlay, time span, exit strategy, and investor returns. So what's your answer to James?
So the detailed response will be in the prospectus that we're about to publish as part of the Purebond deal. But in summary, as in the presentation I've just given, that answers quite a few of James's questions. We're targeting 500,000 ounces on each of the project areas. That is our goal. The way that we've structured these deals, Donald, we're actually, because we are a buyer in a buyer's market, we've been able to negotiate very favourable terms. So before we actually have to acquire these projects, we're able to perform field due diligence. And these projects all have walk-up drill targets. So we are going to get into these projects as quickly as we can. We're going to test their potential. If they don't meet our internal criteria for us to make the investment, and at the end of the day, Mother Nature can be very unkind, despite all of the indicators that we see at surface, until we've actually got drill results on these projects that haven't been drilled using modern techniques, then we won't know what is actually there. But if the projects don't stand up, they don't pass muster, we'll simply move on to the next option. As I say, we've got a pipeline of at least a dozen other opportunities that we're currently working on.
And how long do you actually have for your due diligence period? How long does that last?
So on the deal that we've announced today for Leopard and for Hillside, we've got 6 months that begins today. For the Nara project, we've got 2 years.
Okay, but let's briefly look outside of Zimbabwe. What happens to Karakubis and the Kalahari copper belt? What happens to your other holdings? Where does the priority lie now for Kavango?
So in Botswana, our priority is absolutely Karakubis. Ever since Dave Catterall has been involved in the company and has really helped set us on the right track, where we had taken a few wrong turns in the past, Dave has now really helped us sort those out. So our focus is very much on Karakubis. We put another update on that today. We've just started we're about to start, the IP surveys. So we're looking for potential areas of mineralization. We're then going to follow up with 2 phases of drilling. The first phase of drilling will be to effectively do some subsurface soil geochemistry to help us tighten up our diamond drill targets. Now, we're going to expect to do that over the course of the next 6 months. So the RC drilling I expect will happen in the next 3 months. The diamond drilling will probably be at the start of next year. In terms of Ditau and the KSZ, we're currently working on our plan for Ditau. Our approach there is going to be to seek a partner to come and take that project on. It's another project that's under quite deep cover. It's a big project with big potential, but it is technically very challenging. And we think that based on our experience in the KSZ, that's probably a meal that's a bit too big for Kavango to swallow at this stage.
So
on the
KSZ, farm in for Ditau.
Farming, that's the goal. We'll have to see if we're able to secure that.
Okay.
For the KSZ, pretty much the same story. We've obviously just recently had quite a disappointing drill result where we hit graphite, not the metal sulfides that we were hoping for. So it's back to the drawing board for us in the KSZ. Now, there's a lot of the KSZ that we haven't explored. We know that we're using the right technologies and we're following the right approach, but it is extremely high risk exploration. So what we're currently looking at is what we can do to advance that project, if there's anything we can do to advance that project. With our own funds. But again, we are going to continue to see if we can bring a partner into that one. So for KSZ and Ditau, there will be some work that we do, but our primary focuses are on drilling in Karakubis and drilling in Zimbabwe.
Fantastic. Okay, Ben, perhaps I would have asked this first, but you've given me so much interesting news flow that we simply had to explore all that. Where are you with the 6 million Purebond fundraise announced in May? Which is a very big question, but there you go, I'm asking it last. Where are you with the 6 million Purebond fundraise?
So you correctly said, so the first 1.5 million of that, 1.4 million, sorry, that closed in June at the AGM. The remaining 4.6 million is subject to a whitewash and a shareholder vote. We're currently producing the prospectus and the circular. We hope to release those in the coming weeks. There is quite a lot of work that's had to go into that, and we also felt that we were going to close this project today as well. So we were waiting a little bit. We were a bit behind on preparing the prospectus because obviously today's announcement is quite significant as a new project that's come in. The relationship with Purebond is very strong. We spoke to them on the day that the KSZ result came in. Their exact words were to us were they didn't care if the share price fell to half a penny. They're backing Kavango. We've done the deal at a penny. There's been no attempt to renegotiate the terms. They are very firm and strong supporters of us. So we're pushing ahead at 1 pence a share, which is roughly about a 65% premium to where we're trading today.
Okay, and my final question, Purebond will own 50% plus of the company. Does that involve a change of ownership, or am I getting the wrong end of the stake?
It's 52%, and that's what we need the whitewash for. So the two of the key thresholds under the takeover code, the 30% rule that everybody knows, but there's also another threshold at 50%, where if you own more than 50% of the company, you're then able to trade freely in that company's stock up to 90%. So between 30 and 50, if you were to change your position, that would require further shareholder permission. But between 50 and 90, because at that point you're able to pass ordinary resolutions. The idea of the takeover code is that you've had shareholder approval, what's called a whitewash. You're then able to trade the stock more freely. So if Purebond want to add to their position in the market, they will be able to do so at that point.
So does this count as a friendly takeover by Purebond?
I wouldn't say it's a takeover. They've not asked for board seats. We're putting together a relationship agreement with them. They've not indicated any interest in taking over the company. Purebond itself, it's the family money of the Consagra family, so the family office of the Consagra family. They've got, I think it's around about 300 million in assets. It could be more than that. I don't know the exact figures, but they've got investments across different sectors. They've got mining investments, healthcare, other business enterprises as well. So they're very busy with their own businesses that they run. They haven't indicated any interest for taking over Kavango. And in terms of their overall net worth and their overall portfolio size, the investment in Kavango is still relatively small, albeit extremely meaningful for a business like ours.
Well, what can I say? Wow. Last but most certainly not least, Ben, thank you so much for your time. That was Ben Turney, CEO at Kavango, with an extraordinary update on Kavango Resources. Thank you so much for your time. That was excellent. Thank you.
Thank you.